The spirit of innovation is deeply ingrained in America, and Google is helping Americans innovate in ways both big and small. From improving emergency response times to protecting against cyber attacks, local, state, and federal governments are innovating with Google AI. This is a new era of American innovation. Find out more at g.co/American Innovation.
Reality radio for a really great future. We're talking real money.
It's the most wonderful time of the year, bah humbug. It's my favorite holiday season right now. That is Labor Day weekend. You know why I like Labor Day weekend?
Because summer's ending?
Because summer's over, for some. I just, summer is our excuse to just do nothing. Can you imagine how much more productive we'd be if we didn't have summers in America?
You're going to go ahead and cancel that for 2026?
And as a Floridian, I want to cancel summer because summer is sort of like, if you want to experience what the afterlife is going to be for many of you, spend 3 or 4 or 5 months in Florida in the summer.
There's some love for the audience today. Thank you for sharing that. So kind of big hug.
Hi, everybody. Welcome to Talking Real Money. It's Don back in the saddle again after a little excursion up to Asheville where it was cooler than Florida. Over there is Tom Cock doing the thing that he does in his Don McDonald Show hat.
Yeah. I was cleaning the garage. That's how exciting the holiday is for me. The garage is getting
garage cleaning.
Well, because you got to clean the garage out so the car can go in there because the September is coming, and you know what that means here.
It means
the rain.
Rains,
so
yeah.
I got to get things cleaned out.
Have we been having rains here, the summer rain.
You guys had like an inch in 15 minutes or something.
Not only is it very hellish, it's also very biblical. It's like Noah's flood. We just had so much rain falling from the skies.
So everything is gone in celebration except the studio. Just that's the one thing that.
Yeah, we always have.
Okay, everything else gone.
We'll always have the studio. Anyway, welcome to Talking Real Money. If you want to talk real money with the two of us, the way you do that is to pick up your phone. Well, I guess you pick it up, but you don't really. Not like the old days. But you do dial a number. You do that in the phone app at 855-935-TALK, 855-935-8255. Okay? That's all there is to it. So call us. Now, what Labor Day weekend?
Labor Day weekend.
There really goes my mind. What Labor Day weekend tends to bring is the beginning of real life again. For many of us. And the beginning of real life may actually be a contributing factor in a disputed event that occurs in many Septembers, and it is referred to on Wall Street as the September effect.
I think you could say that, again, if you look at September going back to 1950, it has a negative return as a month. It's down. It's so
about 0.7% on average, which is the worst of any month of the year.
Right. So can we just skip ahead to October because that still gets you through the summer, and then we don't have the down thing in September.
Actually, October 15th is when summer ends in Florida.
That's the official day
for me. Anyway, I've calculated it after being here for now 32 years, and that's
you figured it out.
It's October 15th.
Yeah, so the September effect, it's a real thing in many ways because it becomes self-fulfilling. Mm-hmm. People think, I got to trade, I got to get out of the market. People listen to their financial advisors, which tell them all kinds of wacky things, that the market volatility could be elevated, said one. Well, market volatility could always be elevated for a variety of reasons.
Markets are volatile.
Yeah, people put in this place, well, U.S. equities are largely trading at higher than average multiples. If the expected rate cut doesn't come through in September, that could be bad. They got the tariffs. There's all kinds of things. But those existed in August.
Yeah, it's just that you were on vacation in August, Tom.
You weren't paying attention.
Wait, you were on vacation in June, too, weren't you?
That's a good point.
Wait a minute. Weren't you gone the whole summer?
Yeah, summer here, by the way, is, as you know, delightful. So when it comes to an end, we won't see anybody again until April. So
shouldn't you take vacations then, like in January?
Get the heck out of here. So because there are people that are going to tell you now and loudly that you need to tweak your portfolio. You need to do something now because September's a bad month. And the answer to that should be unequivocally no.
Yeah, I was just going to ask, what then, if there is a September effect, what should we as investors do? And your answer is?
Well, no, except it's a different no. Know your asset allocation, know your risk tolerance. You get that? You like that? Yeah, tricky play on words there. So you got to know, yeah. You
got to know what you got to, but you're still not going to do anything.
Tom and Don are talking real money.
Hi, Don McDonald here. So, what's your plan for retirement? No, really. What's the actual plan? Because hoping the market goes up, stockpiling random investments, and praying your gut instincts are smarter than Wall Street is not a plan. It's a guess. And when the market gets bumpy, and it always does, guessing leads to second guessing. And second guessing leads to panicking. That's why you need more than a portfolio. You need a purpose, a strategy, a real financial plan built just for you by a 100% fiduciary advisor who's legally obligated to act in your best interest. Imagine that. Start your plan today with a free, no-pressure meeting at TalkingRealMoney.com or call 800-386-3004. That's TalkingRealMoney.com, because your future deserves more than crossed fingers and wishful thinking. By the way, no sales pitch, no obligation, just smart help for real people who want to stop guessing and start planning. Appella is an SEC-registered investment advisor. See AppellaWealth.com or the firm's Form ADV for more details.
Your guides to a really great financial future. Tom and Don are talking real money.
855-935-8255 is a really valuable phone number because it gets you to us on Saturdays, where we spend some time talking live with you about your money, your portfolio, your investments, your retirement, your future, your kids' college education funding, all kinds of things. And we try to help you avoid some of the bad stuff that can impact you or affect you along the way, like the September effect, which, by the way, has been a real thing. On average, since 1928, the S&P 500 has gone down in September more than half the time. So
Yeah.
it's not...
But not precipitously. I think it's like 0.5% or something like that. So it's not like it goes
It's a little
down
over
10%.
0.5% on average. But, sometimes it's been bad, some other times good, and other times really good. That's the problem, is that, it's been down more than half the time, but a little less than half the time, September's stock market was up.
Yeah, it's had some pretty miserable times. 2008, of course, pretty negative. You go way back to the, Great Depression era. Of course, that started in October, so you get the little bit of a break there for a minute. So it's been troublesome. But here's the thing: the part that I just said about knowing. I mean, you need to know yourself, you need to know your portfolio, and you need to know that if you own stocks, there's going to be ups and there's going to be downs. It doesn't just go straight up. You're getting paid for dealing with those ups and downs, right? So for most of us, you just have to sit back and ignore the noise, tune out the so-called experts, and agree to live with it. That's all you can really do.
The problem is, though, that many of us want to avoid what we perceive as expected pain points. Like this is, people are saying it's it's been painful over half the time. Why don't I just get out over Labor Day weekend? Well, because the markets are closed, so it's too late. Or why don't I just get out the day before Labor Day weekend and get back in mid-October?
Yeah, which you could do if you wish. Now you got to know when to get back. So you're saying just time it now, and then I'll agree that, the 10th of October, I'm back in. Sure, you could do that. I don't think there's a strategy that's going to create more money. It's likely to create less because the market does have an upward movement to it generally. But sure, you could take that if you really were thinking bad times are immediately. You could do that anytime when you think bad times are ahead. People have done that all kinds of political reasons, economic reasons. There are all kinds of wars. People have bailed, and it ends up costing you, not saving you. I'll put it that way.
And you have to remember that If you missed, there's been a lot of research done into this. If you missed just a few of the best days of the market, you end up leaving tons of money on the table. It can be very, very painful. And do you know when the best single day gain happened?
I'll say September 2008.
October 2008.
Okay.
October 13th, 2008. That was the best single day gain for the S&P 500.
Wow.
11.5% in one day.
1 day. Yeah. Well, it was not a fun fall. Let's put it that way. So,
boy, but it was a volatile fall.
That it was.
But the fact is, in reality, you're likely to miss out on things along the way. We all want all of the wins and none of the losses. We want that in every aspect of our life, I think. But have you ever gotten it? In your life, let's say you've lived for a while, like us. Have you ever has your life been nothing but good with absolutely no bad thrown in?
My pal Jim Sinegal, I only call him that because I used to interview him every year, and he ran Costco for many years.
You guys didn't hang out in between interviews, so he wasn't your pal, Jim Sinegal.
My acquaintance.
Your interviewee.
He would say, you got to take the with the sugar. You get, the other S. Anyway.
So. I was going to say the vinegar, but that's not it.
Okay, well, that's not it either. So.
Okay. Did he actually say that on your show?
No, he did not say that on the show, but he did say it many times. I always loved that quote. It's so true. About everything. But they only sell sugar there. They don't sell the other thing there.
Right, well, and thank God they don't. Well, no, wait. In the spring, they do sell bags of fertilizer. They do have it, and you can get a lot more of the fertilizer than the sugar. It comes in much bigger bags.
Indeed.
So generally speaking, is that an analogy? Is that a metaphor for life? That the manure comes in bigger bags than sugar.
And it's cheaper. Yep. And it's cheaper. You can get a truckload of that rolled right up this afternoon. Boom.
That's life. Oh, wait.
That's not life?
I was just looking. The biggest the biggest one-day gain was not in 2008. It was one of the biggest. The biggest was in March of 1933.
Now, you can be pardoned for that one because it was still just a couple years prior to you being involved in the markets. So.
Heck, it was a couple of years prior to my mother being born. So,
that's a good point.
And she's old because I just got back from seeing her.
Yeah, you're a good son.
No, I'm not.
Yes,
I'm not. No. I'm a terrible son. I feel bad. 855-935-TALK is our phone number, 855-935-8255. We love it when you ask us questions live on the show, and you also can send those in to us. We love those, too. You can write them. Tom gets so excited when he gets a big old stack of questions.
I have a big old stack right now.
TalkingRealMoney.com on the contact form, and I think in honor of the new year beginning this week,
the new year.
This is one Hey, by the way, one of the reasons for the September effect is purported to be the fact that so many companies end their fiscal year in September.
Well, that's true. Yeah.
So that they're moving their investments around. So for me, it's Happy New Year.
I think it's
everybody.
most of the time it's the fact that where you started the program. People are getting back to work. They've been on vacation. They've been messing around. Now I'm back in the office. I'm looking at things. Wait, that stock is not worth that. I'm selling it.
Yeah. You're on a cruise to Europe. You're not looking at your stock portfolio.
Good point.
Now you're back. You're looking and you're doing dumb stuff.
Yeah.
As Jack Bogle once said, when it comes to your portfolio, don't peek. You'll be better off. Pretend you're on vacation 364 out of 365 days a year when it comes to your portfolio, and then look at it on that 365th
I break
day.
with him there. I do it twice a year. So
I'm just saying, okay.
The end of each.
Then look at it
year.
363 days. And at the one.
And that's good advice. Yeah. You'll do better.
All right. What do you have for a question?
I got a lot of questions, but
I want just one. Just
I know
one.
This is the first one is mistake that I made So I'm going to take full responsibility for it. Because we got a number of these.
Wait, hold on. Let's see if I have something to lead into that.
Lash me with something?
I thought maybe I
you
could
got something to lead in with. You're looking for the proper sound effect?
Ladies and gentlemen, Tom made a mistake and is going to correct it.
Yeah, okay. Thank you for that support. Reg wrote us from California. He said, in the 820 podcast, Mind the Gap, you claimed the new senior deduction was only available to people between 65 and 69. I searched the IRS, Google, blah, 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 can find no reference to the upper age limit. When we come back, I'll tell you how I screwed that up and set it straight.
Okay, he screwed it up. We don't need the explanation as to why. He just screwed it up. Let's just leave it at that. We'll be back.
Tom and Don are talking real money.
This episode is brought to you by LifeLock. Between two-factor authentication, strong passwords, and a VPN, you try to be in control of how your info is protected. But many other places also have it, and they might not be as careful. That's why LifeLock monitors hundreds of millions of data points a second for threats. If your identity is stolen, they'll fix it, guaranteed, or your money back. Save up to 40% your first year. Visit LifeLock.com/podcast for 40% off. Terms apply.
For your real life and real future, Tom and Don are talking real money.
Happy New Year, everyone. Welcome back to Talking Real Money. It's Labor Day weekend, and for me, that's the beginning of a new year, or it's just after Labor Day weekend if you're listening to the podcast. If you are not getting in your last little holiday excitement this weekend when we're doing the show live, call us. If you're one of the three people who's not trying to just squeeze out the last little bit of joy from the summer, give us a call at 855-935-TALK. Tom's already done with the joy of summer. He was cleaning the garage.
That is so not true. Tonight I'm going to see my grandson play soccer. Tomorrow night I'm going to see, what's the guy's name? It's Messi or something like that. He's from Argentina, I understand.
You're going to go watch the real men wear pink soccer game?
Exactly. So that's a big deal. Let me just finish this.
All right.
Very quickly.
Tom's correction, ladies and gentlemen. We were trying to extend this this mea culpa as long as humanly possible.
You are, of course.
Okay, we, the royal we.
Exactly. So the senior deduction, as they're calling it, for ages 65 and over is $6,000 per person, right? So $12,000 in a household of two, right? It has income limits, so it phases out at a certain income amount. But here's why I messed it up. And here's the reality. It's only good 25, 26, 27, and 28. Then it's gone. So when I kind of said, well, you only get it between 65 and 68, what I really meant to say was it's all over after 2028. This is a temporary deduction that they've thrown in. This goes back to when the president said you weren't going to have to pay any taxes on Social Security, which is, not quite true here, but this is what they came up with to make that,
do you know
reality? That's not reality.
Do you know how many hours he worked to somehow justify his mistake? And that's what you came up with?
That's the best
That's
I can
all
do.
you could come up with?
All right.
It phases out if you are a single filer at $75,000.
Okay.
And phases out for joint filers at exactly double that, $150,000. So.
But it only is good for this year, next year, 27 and 28. That's it.
Yeah.
No.
So
that's where I screwed up.
Could it be pandering again? Could it be? Could it be along with the free $1,000 if you have a kid?
It's about as tenuous as Lisa Cook's employment at this point. So that's about where we're at.
Some people don't know who Lisa Cook is. So
we
might as well just leave that alone. 855-935-TALK is our phone number. That's 855-935-8255. I actually made a mistake. Can I plug something?
Please.
3 years ago, because I'd had some health issues.
That's the last mistake you made?
Yeah, it's the last one I
3
made.
years ago?
I'd had some health things going on, which you were aware of, and also I got into voice acting, and I did not have time. I stopped doing my fun short story reading podcast.
Which is a great
It's called LitReading.
My grandson's listening to it.
That's Rita Storis. That's Rita Storis, the kid's story one. But I stopped doing both LitReading and Rita Storis in 22. And I decided in the last couple of months or so, the voice work has kind of calmed down a little bit. I feel good. I got a little more time. So I'm bringing it back in this New Year weekend.
You want to try it right now?
No, I can't try it right now.
I was just going to say something that I won't say out loud, and you can tell me if you can read my lips or not.
LitReading, LITREADING.
Oh, as in literary.
Lit
Okay,
reading.
got it.
I got a new O. Henry story that I just read that's dropping on Tuesday
Before
morning.
the candy bar?
It's dropping on Tuesday. Yes, before the candy bar. And I'm going back to trying to do a story a week on LitReading. So if anybody was a LitReading
where can we
listener,
find this? The shameless plug?
The same place you find the Talking Real Money podcast.
Okay.
It's not like I'm making any money off of this. This is a labor of love.
Well, yes.
I think it was
it's a
funny.
service.
The ads in it last month, because it's still up on the internet.
Yeah.
The ads from it last month generated a net $35 for me.
Well, that's, every bit helps there, Chief. Come on.
Exactly. So 855-935-TALK is our phone number, 855-935-8255. When we're going to take a break at the bottom of the hour. When we come back, we want to talk a little bit about, something very strange has happened with the ETF market.
I don't know that this rises to the level of attention it's received, but it's worthy of
It's gotten a
discussion.
lot of attention,
Yeah,
so we're going to share with you the strange things that are going on with exchange-traded funds and whether it, again, makes any difference in your life or not. And remember,
It shouldn't.
most of the stuff...
Oh, it's outrageous.
Our general, really, the main point of this program, I think, is, correct me if I'm wrong, the main point of this program is most of the stuff we read in the financial media and you read in the financial media is utterly pointless when it comes to...
Or the other point is don't do it.
Yeah,
That's
or dangerous.
basically.
I was being generous.
Tom and Don are talking real money.
Introducing the perfect companion to your morning listening routine. AG1's clinically backed formula is now flavor-packed with 3 new delicious flavors, tropical, berry, and citrus. Start the day on a high note with probiotics that taste like the tropics. Mix it up with micronutrients that taste like berry or citrus. And take it all the way back with the classic, AG1 Original, with notes of pineapple and vanilla. Do your health a flavor, or 4, with AG1 Next Gen, the daily health drink. Learn more at drinkag1.com.
Reality radio for a really great future. We're talking real money.
One look at the phone lines will tell you why I look forward to Labor Day every year. Because you're on vacation this weekend, aren't you? Give us a call if you're not on vacation, the two of you.
Raise your hand.
The two of you.
Oh, not if you're driving. That's okay. Oh, the two of you.
The two of you who are not on vacation, one of you call 855-935-TALK, 855-935-8255. We've got some facts for you, some really fun-filled facts for all of you listening. Did you know, I don't think I knew how big a change had occurred in the stock market. In the mid-1990s, there were about 7,500 publicly traded stocks in the United States.
Yeah.
Now there are
Way
less than 4,200 publicly traded stocks in the U.S. That is a huge decline.
Yeah, aren't there more now overseas if you include emerging markets than there are in the United States?
That would be my guess because I've seen numbers of about 11,000 in total overseas funds. So that tells you there are a lot of stocks somewhere other than here. But what's really interesting is the stocks started hundreds and hundreds of years ago. ETFs, exchange traded funds, started
30.
The Spider Fund was the first U.S. ETF in 1993. But do you know who actually brought out the first ETF?
No, I do not.
The Toronto Stock Exchange in 1990. So the first ETF was 35 years ago. And today there are how many ETFs in America? Just America.
Yeah, and before I give that number, how many of them do you need?
Not as many as there are. If there are 4,200 stocks, I would think you would need I don't know, 10 maybe to hold all of those stocks?
Well, you get by with even fewer, but yeah, there's 4,300. That's 4,300.
Almost 4,400.
Exchange traded funds. And the great news is there's a lot of very risky ones. There's single stock funds. There's funds with leverage. There's funds you can bet, and I'm going to say bet in this case, on darn near anything with an ETF. Really, you can. I mean, on energy prices tomorrow, and you can bet up or down, or it's insane. Absolutely crazy.
And unnecessary. They are only being made because the structure of ETFs makes it far easier to create an ETF than it was to create those mutual funds that have been around for 100 years. Although there are still more mutual funds than ETFs by about 2,000. It's over 6,000.
Yeah.
But globally, do you know how many ETFs there are globally?
6,000.
12,000 ETFs. So globally, there are more ETFs than globally traded stocks.
Okay, then I'm going to put it to you. So there's 4,300.
4,270 is the number I
wake up tomorrow, I got to build a portfolio. How in the world do I pick from the 40? By the way, I remember a time when Delta Airlines, in about the year 2000, somebody sent us the list of all the funds you could invest in their 401k. It was like 500 funds. I was like, how would anybody pick from that?
This question, I have been answering this question since 1988. I have been answering this. How do I pick from the thousands of stocks or the thousands of funds out there? How do I pick them? You don't pick the best. You eliminate the worst.
All those things I just mentioned with leverage and inverse.
Right. You can eliminate anything that in an ETF. You can eliminate pretty much anything that charges over 0.5% a year. That's probably half of them.
Very close to it.
You can eliminate anything that is actively managed. That's probably
hard
another
for some people
half.
to decide what is active and what is not.
It's
but
when
okay,
they're picking. You want rules based or you want index.
Yeah,
and you want low fees.
Fair. So rules-based index and low fees, that probably takes in a few hundred, maybe a few more, but not that many.
No, it's
because you got a number of providers there, right? You've got Vanguard, you've got Dimensional, you got Avantis, Fidelity's got those, Schwab's got those.
Barclays, not Barclays. BlackRock has some.
Yep.
So there. I would guess the number, given all of them that each of these groups have, I would guess the number's closer to 1,000. But you can still eliminate over 3,000 easily.
Tom and Don are talking real money.
Hi, Don McDonald here. So, what's your plan for retirement? No, really. What's the actual plan? Because hoping the market goes up, stockpiling random investments, and praying your gut instincts are smarter than Wall Street is not a plan. It's a guess. And when the market gets bumpy, and it always does, guessing leads to second guessing. And second guessing leads to panicking. That's why you need more than a portfolio. You need a purpose, a strategy, a real financial plan built just for you by a 100% fiduciary advisor who's legally obligated to act in your best interest. Imagine that. Start your plan today with a free, no-pressure meeting at TalkingRealMoney.com or call 800-386-3004. That's TalkingRealMoney.com, because your future deserves more than crossed fingers and wishful thinking. By the way, no sales pitch, no obligation, just smart help for real people who want to stop guessing and start planning. Appella is an SEC-registered investment advisor. See AppellaWealth.com or the firm's Form ADV for more details.
Your guides to a really great financial future. Tom and Don are talking real money.
Well, somebody just called us at 855-935-TALK, 855-935-8255, and it was a wrong number. So give us a call with the right number at 855-935-TALK.
You should put them on anyway.
855.
Hey, you got any financial questions or issues? We'll talk to you anyway.
Now, during the break, you probably heard one of the commercials that I write for our free visits at Appella Wealth. Yeah. And Tom told me I had to write new ones because he's always so grumpy about this stuff. So I'm going to share with you, since we don't have any calls, I'm going to share with you my first draft.
This is live creative here on the
first
air.
Draft of, tell me what you think of this new spot. Okay.
So do you want me to be honest here or just be supportive?
No,
what
I don't
would
want
be
you
better
to.
for you?
I think you should be honest. I mean,
Okay.
bear in mind it's a first draft.
So now you don't want me to be when you say it like that.
No,
like,
no, I
it's
do.
only first draft.
I want to make it better.
Okay.
So here we go.
I'm listening. Just go. Yeah.
Are you ready?
Okay. A lot of pressure. Yeah.
You ever wonder how your phone's GPS doesn't need to tell you how you should feel about the trip? It just shows you the best way to get where you're going. That's what a real financial plan should do. Where'd it go? Okay. Forget hunches. I lost my place. Forget hunches, stock tips, and Wall Street shortcuts. At Appella Wealth, we'll sit down with you, look at your money, your goals, your life, and map out a route that actually makes sense. No sales pitch, no detours into annuities or private REITs. Just a free meeting with someone legally required to keep you on the right path. Go to TalkingRealMoney.com and click Meet an Advisor because your retirement needs a well-planned route instead of a bunch of wrong turns.
So you're comparing a meeting with a financial advisor to the guidance you get from your phone to drive.
Yes.
I think it's pretty good. Yeah. It's hard. I wanted to criticize it, but
I was trying
can't.
to think of something new other than the drug commercial because I've done that one twice.
Well, the hodgepodgeitis was always popular too. People still call me and say, "Oh, Don would know I have hodgepodgeitis. I feel bad." So yeah,
maybe I need to come up with a new hodgepodgeitis one. Maybe I'll perform it. Maybe I'll do it as a radio play where I have
like
a doctor going
exorcism.
Yeah, where I have a doctor going, "Oh, ma'am, I think that you have a bad case of hodgepodgeitis.
Take 2 of these and call me in the morning." Yeah,
take an Appella Wealth and call me in the morning.
That was a very popular one, but I like that. That's a good analogy, I think. Yeah,
okay.
very good.
I'll tweak it. There were a couple of things that when I was looking at the draft, I went, "Oh, I forgot that word." 855-935-TALK is the wrong number for you to dial. So don't dial it now or dial it now and don't be you. I don't care. But in the meantime, we do get questions. We do. Honest people ask us questions. I swear they do. They go to TalkingRealMoney.com and they click the contact button and then they type them and they end up in Tom's grubby little fingers right there.
Yeah, and I'm going to apologize to Wayne from San Ramon, California, because this
Got a call.
I went through on Thursday, tried to reorganize everything and found this one. So I do apologize. Wayne writes, "I enjoy your show. I've been listening for 5 to 6 years ago. I thought I'd get some real people input on state taxes and state tax burdens in general. Tom may be able to give some perspective since he used to live in California and is now in Washington."
You were a child.
I know. So I wasn't paying that many taxes when I moved from Berkeley to Seattle, and I was 10 years old. But, okay. Not sure if Don has any experience living outside Florida. Well, yes, he does. He is a Coloradan. Mm-hmm. But Wayne writes, "I currently live in California, retired with my wife. I wanted to know if living in another state such as Washington is much less costly than living in the Bay Area."
Yes.
Background, we own our home. We have a 401k and an IRA. Our income year to year is comprised of income from rentals, capital gains from stock holdings, and savings. Your answer would probably need more detailed information. Yeah, actually it would. But
the Bay Area is one of the most expensive places in the country to live.
But he's talking about differences between real estate's going to be more expensive in the Bay Area, but not a lot, by the way.
Well, compared with Seattle.
Yes. Okay, yeah, that's what I'm talking about. He's comparing Washington and California. Okay. Well, you're right. To the rest of the country, a lot. But the taxation, because this comes up a lot with retirees. People say, "Well, I'm going to move to North Dakota. I'm going to hate the winter, but I'm not going to pay taxes anymore." Well, you're still going to pay taxes. Mm-hmm. California, yes, all those things you mentioned about capital gains, you're going to pay not only federal, you're going to pay state capital gains tax, depending on your circumstances. So taxes are going to be higher in California, yes, than they would be in Washington. The cost of living is going to be higher there than it would be here as well. But I still would suggest you live where you want to live, if you can afford it.
If you want to live in the lowest cost of living state in America,
which is what? Arkansas. Okay. Oh, yeah.
Then
leave it at that.
There you go. 855-935-TALK. Somebody actually dialed the number, and they meant to call us, and that would be Mark in Connecticut. Mark, welcome to the show.
Hey, how you doing, Don?
Good.
Very well.
Yeah, I love your show. I listen every week, or every day, actually. You guys sounded desperate, so I figured I'd give you a call.
We are.
It felt like the ninth grade dance all over again. You know, here I am standing in the corner by myself. So, yeah, pretty much.
Yeah, I'm calling about my 401k. So my 401k, it's got a lot of active funds, Dodge and Cox, Invesco, but there were 3 Vanguard funds that were super cheap. There's a 500 index mutual fund, extended market, and an international, and that's what I've been invested in.
Good.
The tickers.
That sounds pretty good, by the way, to me.
Yeah. No, those 3 were great, and I've used them for years. And like one of them's VIIX.
Yep.
That's the S&P 500.
Sure.
Mm-hmm.
Yep.
A couple months ago, my company, it's through Fidelity, and I love Fidelity, man. Fidelity's awesome. I've had 3 companies I've worked for in my career, and it ties them all together, and it's my HSA's there. I really like Fidelity. They're the way they do record keeping.
Yeah, the reporting. Yes.
Yes.
Yeah.
But these 3 mutual funds, a couple of months ago, they changed. They don't have ticker symbols anymore, and they now are CITs.
Oh,
and I think
so they just have proprietary stuff. Yeah. But they tell you the assets they're owning, correct?
Well, I can't get any information on them.
30 seconds.
VIIX or VIIX S&P 5. It used to have an expense ratio of 0.03. Now it's 0.015, but there's no ticker symbol, so I can't get any detail of.
Tell you what, hang on with us just a minute. Hang on with us just a minute. We got to take a break. A CIT, by the way, for those of you who don't know, it's a collective investment trust. It's pooled investments inside qualified retirement plans so that you can put a lot of strategies into a single account, in essence. We'll be right back and talk more about it right after this.
Tom and Don are talking real money.
Does it ever feel like you're a marketing professional just speaking into the void? Well, with LinkedIn ads, you can know you're reaching the right decision makers. You can even target buyers by job title, industry, company, seniority, skills. Wait, did I say job title yet? Get started today and see how you can avoid the void and reach the right buyers with LinkedIn ads. We'll even give you a $100 credit on your next campaign. Get started at linkedin.com/results. Terms and conditions apply.
For your real life and real future, Tom and Don are talking real money.
Oh, collective investment trust, CITs. Yep. They're a confusing, I believe, and I don't really know this for a fact, but I am pretty sure that I read this, that there are ERISA regulations, that CITs are regulated by the Department of Labor under ERISA, that they must give you a report, and I thought it was monthly, but I may be wrong.
On what they hold.
On what they hold. Are they giving you that report, Mark?
They might be. I to be honest, I haven't checked, but
they do not have ticker symbols.
Fidelity website.
They do not have ticker symbols. They don't have ticker symbols, and they never will.
Right.
So you are not going to be able to publicly access
Thanks for that.
Go ahead. Sorry, I didn't hear what Don said there. What did you say?
I said you're not going to be able to publicly access that information.
But you think Fidelity probably has a monthly report somewhere?
Yes. My understanding is that CITs must report.
Okay, so there's probably something out there. I'll go check it out. I'm on a walk right now, so I can't. I'm on my laptop, but I bet it's out there. But I guess my other question is, I mean, why do they do this, and who's benefiting out of this? Is my company getting a little piece of the pie or something?
My guess is that they got sold this. That it somehow eased their burden of reporting, that it falls onto somebody else rather than your company. That is my guess. But I would also guess, I don't think there's a kickback coming from these because they're such low cost products.
And I'd be surprised if that was even allowed anymore. So.
And I've checked them. They work exactly like the mutual fund.
Yeah.
Pretty much. You know, the daily change and the it's exact. So
yeah, it's
I mean,
just
if anything, I'm benefiting. I mean, it's like 2 basis points less expense.
exactly.
So,
I don't think you're going to be hurt. But if you want to know what's in there, you will need to get that report. And I just checked, and it is quarterly that they must report their holdings.
Okay. It's only been a couple months, so maybe there's nothing out there yet.
There'll probably be one at the end of September.
Okay, perfect.
All right, Mark?
All right, this has been helpful.
Enjoy your walk.
All right, thank you.
Thanks for calling. Thanks for listening. And remember, you can listen to our podcast.
Wait, how is he
all the
listening
time.
while walking? You mean
He's
like
got a
TuneIn
phone.
Radio or something?
Yeah, you can listen to the Northwest News Radio app. You can listen on TuneIn Radio or all of those little radio services up there.
There's a lot of them.
There's a lot of them.
I just read how Spotify's trying to do more too.
Live radio
stuff. Yeah. Mm-hmm. Yep.
They got to do something. They're losing subscribers to Apple. They better get busy.
Yeah.
Apple Music has really taken off. And it's funny, for our podcast, for Talking Real Money, we have far more listeners on Apple than Spotify.
I never figured that out. Why is that?
I think it's an age thing. I think the demographic for Spotify, I think it skews younger because it has a free tier, which Apple does not have.
I see.
You always have to.
Well,
Apple Podcasts you don't have to pay for, but Apple Music you have to pay for. So I don't know. I don't know why, but I do know it's different. And it's funny. LitReading, my short story podcast, gets more listeners on Spotify than on Apple Podcasts because
makes sense.
They run a little younger. Anyway, if you have any questions, go to talkingrealmoney.com, send them in there. Call our shows on Saturday at 855-935-TALK. Or if you really need some big-time help, you want to sit down with somebody, one of our Appella advisors, for free, for nothing, no obligation, go to talkingrealmoney.com, click on the button that says Meet an Advisor.
The opinions and views expressed on this podcast were current on the date recorded.
Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone.
This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction.
Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor.
Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services.
Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.